Welcome. In this video, we talk about losses from mutual funds. At a time when the world is going through crisis from the coronavirus infections, which has also impacted the stock markets, people are staring at losses from their mutual fund investments. To tell the truth, mutual funds never give losses to its investors. It is only the investor who creates loss by exiting his investments through his or her impatience. Mutual fund is an asset which creates wealth through the growth in economy or economic activity. Nowhere in the history of the world that growth has seen a degrowth. It had gone through some challenges at times while it becomes past and comes through those challenges and grows again. Whereas people lose their faith or confidence that they have on the investment and get out of their investments. And when such moving out of investment happens, when there's a challenge in the economy, they book losses, which otherwise is a notional loss, becomes permanent loss once we exit the investment. Let's take an example. In 2007, markets had gone through 300% growth from 2003. That is 2003 to 2007, market went up 300%. If somebody had invested into the market in 2007, at the time SENSEX was 21,000. In the very next year, we went through a financial crisis, global financial crisis, which melted down markets by 60%. If somebody had invested 100 rupees in 2007, that value of that 100 rupees would be 40 rupees in 2008. If they have lost their patience, got fear and exited in 2008, they would have booked 60% loss. They would have got back only 40 rupees from the 100 they invested. Instead, if they had stayed invested for a longer period, of course that time it took a little longer than what normal time it takes, because whenever there is a crisis that hits the global world or economy, it takes time to revive. From 2007 to 2017, it took to come back to the same levels what it was in 2007. By coming back to same levels, what I mean to say is the euphoria. In 2007, market was at its peak. In 2017, it came to similar condition after 10 years. Instead of exiting in 2008, if somebody who invested 100 rupees in 2007 had put another 50 rupees into the market in 2008, their 100 became 200 in 2017. That 50 addition what they put would have become 250 in 2017. That is 150 investment became 450, 200% returns in 10 years time. So being patient, holding your investments will help only have profits from mutual funds. We have a similar condition now today due to coronavirus impact on the global world. We are going through a lockdown which has impacted all the economies, and markets are down 40%. If suppose you had entered your you started your investment in 2018 or end of 2017 when market was at 40,000, 42,000, now your investment will be down 35-40%. It doesn't mean we are going to go to zero. We are going to get back to normal and get to another high in the next cycle. Probably like how it happened in the last 10 years, it might take another 10 years to get back to the same euphoria which we had in 2017. If you had invested 100 rupees in 2018, add another 50 rupees now or whatever you can to add to your investments. In the next 10 years, SENSEX is likely to be at 1 lakh. So your 100 put at 42,000 will become 200. If you put another 50 now, it will become 150. So 150 will become 350. So it is always profits from mutual funds for those who have patience. In the current situation where the world is locked down due to fears of virus spread which will cause death, what is the chance that you or one of a family member will have this virus and lead to a death? 99% it will not happen, right? we are all very confident that we will get back from this chaos situation and get back to normalcy and lead our balanced part of our life, right? Instead, will we commit suicide thinking that this virus will attack me and cause me pain and I will die later? Instead, let me die soon. Will we do that? Well, it is the same with exiting investments when there is a small notional loss in it. If you get out of your investments now thinking that it will go to zero, which will never happen, you are going to book a permanent loss in your investment. And in an asset which has aggressive growth, when you are getting out with big losses, to regain that lost money from another asset which is going to be passive or lower in their growth, like a FD, it will take enormous amount of time. Say today your investment is down 30%, you are exiting it now. To regain that 30% through FDs will take at least 10 years. In 10 years time, stock market is going to be 2.5 times from where we are now. Staying invested will give you far higher returns than exiting. Don't worry about market going to zero, it will never happen. Let me give an example for the fear that is there in people's mind. If suppose real estate was quoted in the stock exchanges, like how stocks are quoted, do you know what will be the condition of real estate today? Say suppose Mumbai had 10,000 rupees per square feet as its going rate in the exchange. The day we hit our first coronavirus case, that rate would have dropped 20% from 10,000 to 8,000. Today, as the condition is getting worse, Mumbai has highest number of cases. Price of real estate there would be somewhere around 1,000 to 2,000, 80% down. Will that mean people will sell all their real estate and sit on the roads? We will not do that, right? Because we have confidence that this will get into normalcy soon and prices will come up. Same way it is with the markets too. Stay invested. Nothing is going to go wrong. In fact, in real estate, suppose in real estate you want to sell today, you cannot sell it. Whole country is locked down. Whereas businesses which are producing products that people consume, even if we are locked down, people are consuming. They are selling their products. So stocks are going to keep growing, whatever be the condition. Only that you need patience. Give it patience. It gives you the biggest returns possible, which no other asset can make on this planet. Thank you.